Hello again, everybody. Doing it from the RFX Forex and Trading. Going to be taking a look back at the performance of my methodology over the last several months to show you the types of trades that I aim for on a regular basis each month and to give an idea of the type of profitability that you can expect to see from this methodology over the long term. Now, one of the main conclusions that I've drawn about currency trading has been that if you're going to be profitable over the long term, swing trading is going to be your best approach to long-term trading success. Even though day trading is the most popular approach, what I found is that because of the significant level of volatility that takes place on the smaller time frames, long-term profitability is going to be something that is going to be difficult to achieve. With swing trading, on the other hand, you're able to target larger trading gains with more stable and predictable market patterns while being in a much better position to predict, identify, and stay away from large reversals that can significantly affect your profitability. Here in this example on the New Zealand Swiss franc, you can see a typical example of the benefit of swing trading and the benefit of being able to use the larger time frames to spot major reversals. In this situation, I targeted a strong trading gain of 231 pips as I took advantage of the sharp breakout that was taking place on the consolidation set up on the daily chart. Now, not only was the methodology able to provide me with this large trading gain, but it was also able to pinpoint where I needed to exit in order to be able to avoid a sharp reversal. This is one of the many benefits of swing trading on a larger time frames, the ability to spot reversals that can easily create losing traps, especially when you're day trading the market and you're not aware of what is happening on the daily chart. So the larger picture of what is taking place on the currency market allows you to better predict these reversals that can take day traders by surprise who are more focused on the smaller pip movements. Now, following the exit that provided me with this strong trading gain, as you can see here, the market reversed sharply as it reflected the market reaction to the removal of the exchange rate peg by the Swiss National Bank in January of 2015. So this was an extreme example of the benefit of my methodology and the benefit of swing trading on a larger time frames in being able to predict and sidestep these major reversals that can wipe out your trading account. So over the long term, trading success is more likely to be achieved by swing trading in the currency market and avoiding the volatility of the smaller time frames. Now, over the last 5 years, I've been swing trading the currency market using my live account at Copy. But one of the disadvantages of this platform is that it does not lend itself to be tracked and verified by my FX book. So since I've been providing trading signals to subscribers, what I've had to do is to use an FXCM demo account that reflected the trades that I was executing on my live account. Now, in terms of the performance of the methodology so far this year, you'll notice that following the brief setback that took place here, the methodology was able to recover quite aggressively and provide a strong trading gain of 46.43% in just a few trades. This was unfortunately followed by a brief period of pullback and sideways movement, which represented a lower performance of the methodology, which represented the fact that during this period, the market exhibited a significant level of lower liquidity and market activity, which reduced the number of trading opportunities that could be identified by the methodology. So whereas we were able to comfortably target larger trading gains of between 140 and 200 pips, during this period, we were only able to capture smaller trading gains of, on average, 100 pips. However, as the liquidity returned to the market, the methodology was able to resume its normal course and identify large trading gains of 175 pips and most recently 194 pips. So overall, what you can expect to see from this methodology is a consistent and large rate of return over the long term by targeting only the best opportunities that provide trading gains of between 100 and 200 pips using the daily chart and the 4-hour time frame. Now, in order to provide an even greater level of transparency to subscribers, what I've done is to open a real account with FX Pro, which is a trading platform that allows us to track the performance of trading on its account. So this trading system here is going to be reflective of the performance of my methodology heading into 2017. And as you can see here, we have so far started out on a strong note with this strong trading gain of 198 pips on the New Zealand Japanese yen. So with this live account at FX Pro, you're going to be able to see firsthand how my methodology is able to target these trading gains on a regular basis. And by following this system on my FX book, you'll not only be able to look at the profitability over the next several months, but you're also going to be able to examine the sustainability of this system by using the statistical analysis provided by my FX book. So over the long term, you can expect to see a continued level of profitability using this methodology, and you'll be able to see how the market is going to be still able to provide trading opportunities regardless of the market conditions and the level of volatility that is present in the market from time to time. So keep an eye on my methodology, subscribe to my trading signals, sign up, and be a part of this journey toward long-term success.